Apartment market data from Q1 2014 is in, and the performance stats for the U.S. apartment market look very similar to what we've seen previously, and that's a good thing. But we are seeing some very interesting shifts in momentum by product type and by region. Let's hit the highlights and explore some of those storylines that are occurring in today's edition of Apartment Market Dynamics from MPF Research. He's Greg Willett. I'm Jay Parsons. And Greg, get us started by looking at some of the big picture numbers and help set the stage for what's going on in the market right now.
Jay, let's begin with occupancy, and no drastic news here. The specific number for first quarter is 95% even. That's actually unchanged on a quarterly basis, while it's up a minor 10 basis points on an annual basis. And really now we've been 7 consecutive quarters where we're right at that 95% mark, up a tick or two or from one quarter to another, really just normal seasonality. So again, no change in that story. In terms of how did we get there, for the quarter we absorbed 35,723 units in the 100 largest markets across the country. That number is very solid. It is a tiny bit below the completion volume of 45,806 units. The trailing 12-month totals for supply and demand are virtually identical: 182,321 units absorbed and 183,127 units completed.
And on the pricing front, effective rents for new leases in the same-store data set went up 0.9% in Q1, and that took year-over-year change up to 3.3%. And as with occupancy, that annual rent change number is basically unchanged for 7 consecutive quarters, right around 3% on an annual basis, give or take a few ticks. So Greg, we're at almost 2 straight years of occupancy and annual rent growth levels essentially unchanged, holding very steady. So what differences are we starting to see emerging in terms of the storylines of the U.S. apartment market?
The interesting numbers are really, I think, on the rent growth side, and particularly when you get down to the metro level. And I would even consider the first quarter results mildly surprising on some of these rent growth numbers that we saw. And to dig into that, let's look at the leaderboard in terms of who's on top for annual rent growth right now. We normally do top 10. Let's go top 12 this time, because that is the logical break point as we look at results. In the number 1 spot on annual growth right now, it is Oakland with 9.1% annual change. San Jose rents up 8.7%. San Francisco 8.1%. Portland 7.9%. The Denver Boulder area 7.6%, and Seattle Tacoma up 6.2%. On the chart here, we've got the annual numbers as of first quarter, and we're comparing them to annual numbers at the end of 2013. And there's the real surprise that really all of these have accelerated their growth pace, even though for the most part they're pretty active construction markets. And we had really thought that in the course of 2014 that the rent growth numbers in these top tier metros would slow down, even though these ones would still remain on top in the overall rankings.
And let's look at numbers 7 through 12. And here we see Miami at 5.7%, San Diego and Houston at 4.7%, Austin at 4.5%, Atlanta and Nashville at 4.3%. So in the second group, we generally see the same pattern that we saw in the top 6 markets, where we're seeing improved momentum, though not nearly to the same degree. The one exception, though, is San Diego. We saw a significant jump between fourth quarter and first quarter, very similar to the improved momentum that we saw in some of the top 6 markets that Greg mentioned in the west region of the country. San Diego, of course, also in the west. There, rent growth went from 3.6% annually one quarter ago to 4.7% currently, and that put it up into the top 10 list and knocked out West Palm Beach, which is the only one that fell out. A few others to highlight that just fell short of our top 12 list are Dallas, Orange County, and Fort Lauderdale. And Greg, like a lot of the markets that you mentioned, the markets that just missed that top 6 list are also places where we've seen very significant construction activity, and with a lot of product and lease up. We expected to see rent growth levels start to cool a little bit, but that's just not what's happened. So that's a very good sign for those markets.
It is a good sign for those markets, and I will also point out in those markets you're still getting really strong rent growth at the top end of the market, even though there is a lot of construction coming online there. So the second part of this rent growth story is then the markets that are at the bottom of the list. We've actually seen a little bit of deterioration in those slower movers over the last couple of quarters. And rather than looking at individual markets, really you can see the story if you look at regional results. So here we have a graphic for you of annual rent growth by region across the country. You can see that the West is in front by a big margin, 5% increase in pricing on an annual basis. The South at 2.7%, the Midwest at 2.2%, and the Northeast at 1.8%. Now, for the Midwest and Northeast, I'm going to point out, I think there's some weather-related results here, and certainly bad weather in both fourth quarter and first quarter. And what we've seen is you look at the pricing for new folks coming in the door, given that there are so few who have shown up to look at apartments. Operators are very conservative, trying to grab those that available demand that's there. Another interesting thing that's happened is that the ability to, when leases expire, convert those into renewals, that's been sky high in the Midwest and Northeast over the last couple of quarters. Again, I think a weather influence. And if your weak performers are really tied to weather, that's suggesting some upside potential as we go in across the remainder of the year. So we're pretty optimistic on the pricing front.
And one more topic to cover in terms of changing influences as of Q1 2014, and that is apartment construction activity. There were a bunch of construction starts in the start of the year, despite all that uncooperative weather that Greg mentioned. Construction in the core 100 metros nationally totaled 366,342 units at the end of Q1. And here are the top 5 markets for construction at the end of first quarter: New York, Washington, D.C., Dallas, Houston, and Seattle. And then just missing the top 5, L.A., Austin, and Denver, coming in just short, but all with more than 12,000 units underway. Let's go back to the macro level story here for the U.S. apartment market in terms of the construction story. Construction levels through Q1 are right up at the highest levels that we've seen in this current cycle. And that surprises us a little bit. We really thought that in 2014 we would see starts drop off by about 10%, and that just hasn't happened. So it looks like now we're going to see construction levels stay on par with 2013 levels throughout this year. And what happened is that permit levels started to drop off in the second half of 2013, but then they really jumped up much more than really anyone expected in the first few months of 2014. And so that's going to make for a very interesting story throughout this year, looking at what point does construction start to slow down.
And so, Jay, moving ahead over the next couple of weeks, we're going to be fine-tuning the forecasts on the metro level and rolling those up into the national big picture. Looking at what happened in first quarter, nothing drastic that really changed the world, but again, mild surprises. I think where we're going to end up is really bumping the revenue growth potential in 2014 from where we had been saying. And that really reflecting that the rent growth numbers are looking strong. For 2015, then, we're probably actually going to downgrade a little bit, and that reflects the construction starts coming in at bigger numbers than we'd anticipated.
And as we've mentioned, there's been some very interesting stories that have been occurring at the metro level. We're going to hit on those in the coming weeks and future episodes of Apartment Market Dynamics. So until then, for Greg Willett and for MPF Research, I'm Jay Parsons. Thank you for watching Apartment Market Dynamics.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.